Welcome to the Master Passive Income Podcast, where we talk about investing in real estate rental properties with a special focus on making enough money so you can quit your job and live the dream life. And now, here is your host, Dustin Heiner.
All right, everybody, welcome to the Master Passive Income Show. Today, I'm super excited that we are going to be learning how to use our self-directed 401k, IRAs, using that so that we can actually have control over everything. Now, as far as terminology, I brought an expert here on the show with me today, Brandon Walsh with Rocket Dollar. Thank you so much for being on here so you could show us how we can use our IRAs, our 401ks, and be self-directed so we can control everything rather than having somebody else control us. Thanks for being on the show.
Thank you, Dustin. Master Passive Income is always one of our best partners, so really excited to be on here. Many of our real estate investing customers constantly go to Dustin's website to get educated how to own a single family home, really figure out how that fits inside of the self-directed IRA. And often his people that use his education are consistently some of the best educated customers that come to us. It makes my job really easy as a salesperson. Sometimes people barely ask a question, just a quick one or two, and they're off to purchase an account and off on their way. So Dustin invited me today to really talk about some really awesome things that you can do with a self-directed IRA. Dustin covers single family home investing backwards and forwards all around on his website, his education, his podcast and content. And he said, hey, a lot of my customers, they love the real estate, but they've also been asking about other types of asset classes. How does that work in an IRA? So what we're going to do today here, we're going to talk a little bit about real estate, kind of expand that past the single family home, what you can do with self-directed IRA or solo 401k. And then we're also going to expand into some other asset classes like startups, precious metals, cryptocurrency, or even like a private investment fund. What does Rocket Dollar offer? We offer a self-directed traditional IRA, a self-directed Roth IRA, and a self-directed solo 401k. That's usually for self-employed individuals and really powerful for some real estate reasons that we'll get into. We have a few other specialty IRAs, but that's kind of our bread and butter, these three products up here. And what our motto is kind of no taxes. We have a lot of alternative investors that they've explored real estate investing or these other assets, but a lot of times they get killed in taxes in those accounts. Our accounts help you get the same tax breaks that you get in stocks and bonds with real estate, precious metals, cryptocurrency, startups, other assets, aggressive assets, and sometimes really safe and yield-bearing investments. So Dustin knows one of these really well on here. We've got all the types of assets that someone can do in a self-directed IRA or solo 401k. Top one of our biggest asks from customers every day is real estate. Dustin's doing education. That's a whole industry moving real estate investments through IRAs and getting that great tax benefit. Sometimes I run into real estate people, they call me on the phone and they find out for the first time, Dustin, I don't know if you've ever encountered this. They've never heard of doing real estate investing in an IRA and they're a little bit mad about it. They've never heard about it.
I definitely get that all the time because what people do is they realize, hey, I have all this money sitting there and I'm trying to invest someplace else. And I have, just mutual funds or 401ks and IRAs. And they're starting to realize now that they can actually use that. Now, the caveat is you can't touch that money when it comes back in. Like if you make money in your real estate, it goes right back into your 401k. You can't touch it yourself. And so that's the one little caveat. But other than that, man, you save that for retirement. Instead of having somebody else literally manage everything, you are the one in control, which is what I absolutely love about having a solo 401k or self-directed IRA.
And, when I hear real estate investors, kind of like the one big tool they have, that 1031 exchange, that's like the one thing you can't do in a retirement account. However, there is a world of tax advantages that you can get through these accounts and yet really expand your creative real estate investing. And so we have a lot of investors come to us that just get really excited about what projects they can do in real estate in a self-directed IRA, solo 401k. Some of the other assets that people also don't know you can do is private equity or a hedge fund. This could be a great opportunity, great money manager, but sometimes, maybe they're just not approved at Merrill Lynch yet. Charles Schwab, they'll offer this sometimes to their very top level customers, but some of these investments are really difficult to get. A loan, a debt, a promissory note. This is, something people in America do every day. Loaning a business or maybe a real estate developer money because they believe in their project. And they think, hey, I can get a nice return. This person needs some capital. You can actually do that to a specific private business or person through a self-directed IRA. Venture capital, startups and crowdfunding. This is typically, obviously not what people think of as a retirement asset, but Rocket Dollar customers love that there's a tax advantage. So sometimes they'll take a small portion of their portfolio, put it into a startup or a venture capital fund that they believe in. And every time, let's say if you have a startup blow up, you're getting some very nice tax benefits on that because you hear about startup employees, startup investors, they finally hit their big break, then they have a giant tax bill to take care of. Very popular with our customers right now, red hot. As of this morning, I think Bitcoin was somewhere around 51 or 52. It could obviously be different. Very high flying asset, but Bitcoin and digital assets and cryptocurrencies. This is by far the newest asset that we have. Part of the self-directed IRA is that when a new asset comes onto the market, you do not have to wait for traditional finance to start accepting it, to do it in an IRA or solo 401k. So investors have already been doing crypto activity in self-directed IRAs for quite a while. And we've been hoping to try and make that easier through our account structure. Precious metals, another one of the kind of foundational things that started self-directed IRAs, along with real estate. Big favorite of many gold investors, silver investors. For thousands of years, there has been value in precious metals. It is still no different right now. So people a lot of find this as a defensive asset, maybe something that moves different than the stock market, or just provide some value at a certain time. They think, hey, this is a great time to be in metals, maybe move a little bit from other assets into metals, and they can buy their time and figure out, what assets they want to enter after that. Farming assets, assets in rural towns, sometimes investing directly in harvest, crops, livestock. These are things that a lot of Americans, they've never lived in the city, but they're a damn good businessman or woman in their own town. And a lot of it's just frustrating is, Fidelity is in Boston, a lot of financial companies in New York. They're never sometimes going to notice a really good investment opportunity, maybe at a farm next door or a small business in a town near you. So we have some people that, one of the best performing people in 2019 had about 30 cattle in his IRA. He beat almost anyone as far as performance. And that's because he is an expert at cattle and livestock. And who should tell him that he cannot invest in retirement in things that he's very skilled at, can perform well in. International investments, something, you can get international funds, but they're usually extremely broad when you access an international fund or a stock or bond. It's the top 5 or 6 companies in another country. So sometimes, again, you have a relative or you come, maybe you're an immigrant to the United States, you have assets in your old country or home country or other countries you visit that are very powerful that Americans are currently ignoring or don't have any exposure to. Through a self-directed IRA, as long as you're following all the U.S. laws and regulations, you might not get tax shielding in that country, but you can get tax advantages in the United States for your investing. And the last big point and more, with a checkbook IRA, which I'm going to get into in a minute here, you can access almost any type of investment, whether Rocket Dollar has heard about it or not. As long as you're following the IRS rules, you can really flex your investment muscles, brainstorm, and say, hey, this is a really creative new investment, but I know it's going to be good for my retirement account. So I got a diagram here of the basic self-directed IRA, and this is what's called the checkbook IRA or IRA LLC. Dustin, I know you're really familiar with this structure. A lot of master passive income.
We use that all the time. Absolutely. Yeah. We make sure that we control our assets, which is you buy one rental property, it makes you $250 a month in passive income, but you have expenses that you got to have come in and out. And so that's absolutely what we use that. And all the money stays in our IRA so we can have it for retirement as well. And it grows tax free. So it's just a great way to actually invest your money.
I just want to say a little bit about Rocket Dollar. We have a discount code here for master passive income customers. Rocket Dollar, we try to offer this checkbook IRA at a much cheaper price. Sometimes it's up to a third cheaper than some of the competition out there. We try and do it the same way every time, just that IRA, that Colorado LLC in the bank account. I can talk about how you can, if you ever have a question about how that Colorado LLC works in a certain state, feel free to call me and how that would be structured. So for $360, and $15 a month, you get an IRA, an LLC, and a bank account relationship with a bank that are a partner that understands real estate and all these different alternative assets. So on the right here, you'll see kind of some of our competitors' fees, which can get pretty long and crazy sometimes. Rocket Dollar was started because we feel a lot of these fee sheets were too ridiculous, and they're restricting people from being able to invest in alternative assets in their IRAs. So with the Master Passive Income code, you can click Dustin's. Make sure to click his link so he gets credit there on Master Passive Income site. But for you to get $50 off, you can enter Master Passive Income in the referral code box right before you get to our final purchase at Rocket Dollar. That'll get you $50 off in your account. And hopefully, I'd love if you had a conversation with me and Dustin, all the great education that he has. And so many people, obviously, you'll see a couple, the 3 boxes here representing the self-directed IRA, what Rocket Dollar creates for our customers. Many people are used to just a standard IRA, a traditional Roth IRA that they get Fidelity, Schwab, and these are great stocks and bond companies, and they've been experts at that to offer a great product for a long time. But some people say, hey, Fidelity, can I get this real estate investment in my IRA? It's, maybe it's a real estate fund or it's a property. And Fidelity is pretty much always going to say no. They just say, hey, this is not our thing. We do well in stocks and bonds. We know our customers do well in stocks and bonds. We're going to kind of stay away. It's like too much compliance for us to help add this investment. It's not that Fidelity is not able to add that investment. Someone like Fidelity, these big companies did do alternative self-directed investing for a lot of their higher level clients. It's just a lot of times it's troublesome for them. They're not structured for it. It's a little bit of a time waster because they just say, hey, we're not equipped for this. So go somewhere else to go do that type of investment. And, you'll see the LLC in the bank account here, which I'll get into in just a second. We have competitors that use the direct custody structure, just like Fidelity, Merrill Lynch, and all these other companies. They are more alternatives friendly. They will let you get into quite a different alternatives. And Rocket Dollar offers that structure to some customers in a limited fashion. However, when it's a single family home investment right in your backyard, when it is a real estate developer down the street, when it's a private startup that is very strong and promising, but maybe they haven't proved themselves to the entire world. You and all your buddies know that is a great investment. However, a custodian does not. This is where the LLC and the bank account comes in. You'll hear a lot of terms about this. IRA LLC, checkbook control, referring to the bank account, a checking account that you can write a check, send a wire, send money to an investment. So why does Rocket Dollar have a Colorado LLC and a bank account? The Colorado LLC, we put the customer in charge as the manager of their LLC. They get to manage and decide what investments are downstream in their IRA. Whether that's a single family home investment like Dustin, I hear, a hotel investment that I've got in the chart here, or a private equity deal. And again, the constant thing I try and drill on the customers, whatever you think is allowed by the IRS, you can do it in a self-directed IRA with an LLC and a bank account. And Dustin, why, with a single family home investment, your expertise, why is that bank account so powerful for a customer to have?
Well, because there are so many different types of expenses in your business that would come up that you might need to either have a contractor go out and do some work, and you don't want to just get any contractor. You want to have maybe multiple contractors. You can actually have checks go out from you, or basically pay out of that account to different contractors instead of having to worry about getting a whole loan or something like that. So it is so much better than getting a big loan. You could actually have a little bits of money coming out at a time.
Yeah, and so that this bank account in real estate, it just allows a lot of control over the daily transactions, which some investments don't have many daily transactions. Like sometimes you just send money to a fund and you forget about it for years. Or real estate property, you have transactions every month. It's a rent check. Bare minimum, you're going to have at least one a month, a rent check coming in. If a custodian is processing that, and they're also processing contractor checks, repairs, the sink broke, you got to get a new washer dryer. These little things can add up. A bank account inside of an IRA and a checkbook IRA really helps you distribute money as quickly as possible. Your contractor needs to get paid. What if the custodian hasn't paid your contractor yet? They're obviously not going to be happy. They might stop work and say, hey, what's up? I haven't got my pay in 2 weeks. Your rent check, going back the other way. What if the money comes back from your real estate investment? What if the custodian hasn't processed your rent check yet? And these are complaints we've heard from customers where they tried to deal with more direct real estate. They love the bank account and the LLC. They say, hey, do I have to do more work? The customers love it. They get to handle all the transactions going back and forth. They get to make sure everyone's paid on time. They get to make sure their IRA is paid on time. And they also don't have to worry about the custodian slowing anything down. So to review here, the really three biggest things. What does the LLC and bank account offer? 1, more control over your investments. 2, no deal review holdups. If you've got a property and you want to move on it, if you've got an investment that's a little new, you can send money right that day and sign as the LLC manager to approve that investment. And no per investment fees. This is a really great efficiency that Rocket Dollar has offered. It says, hey, if someone has 40 investments or 15 real estate properties, they still pay the same $15 a month to us. Since they've got an LLC and a bank account, it allows a lot of efficiency to move money in and out very quickly. Since Rocket Dollar doesn't have to deal with it, since the customer's officiating all those quick transactions when they need to, we don't have to charge every single investment a customer does. Just quick reviewing the stuff of an LLC here to really drill down on it. You are the manager of the LLC, not the custodian. If you have a solo 401k, we'll show that structure in a little bit. You're just the trustee. You're the trustee and you're in charge of those bank accounts. This means that you can select almost any active passive investment and avoid the capital gains on it. I drill this down because often people go through an entire presentation. They love the idea and they're like, well, I'm still going to get capital gains in my real estate or cryptocurrency or no capital gains as long as it's in a traditional or a Roth account. You can access alternatives that move differently than the stock market. Obviously our stock market is very volatile. It's mostly been good volatility, but retirees get very nervous around that time, seeing all that volatility. And you decide when to send the money. When you see an investment, you get to move. And with that checking account, the checking account almost works like a money market. Think of it like in your stocks, you keep money in your money market. You say, hey, there's a new stock coming out. I really want to jump on it right now. You buy it, and then that money comes out of your money market. Think of that checking account like a money market. You can access that almost any time, except it's available for almost any alternative investment. So Dustin, with this single family home investing, why do your customers and, the people you educate find that so powerful to do in an IRA?
For a single family home, it's because as we are having as much control as possible, as investors, we want to have options. We want to be able to be proactive. We don't want to just say, give this to somebody and you try to make me money. No, we want our own options to be able to do whatever we want with our money. And so if you have a deal that comes up that needs a little bit of money and then another deal pops up, you don't have to, take a whole lump sum, or you don't have to go after somebody else for private money. You can tap into your own solo 401k or the IRA. You can tap into those to buy properties and also to purchase properties, and all that money goes back in so that when you retire, you have even more money that is going to be for your retirement. And the biggest thing is, like you said it, Brandon, you have independent control over everything. And I personally love not having to depend on anybody. I'd rather do it all myself so that I know I'm going to be getting a good return and actually protecting my assets.
Yeah. And so a lot of real estate investors just find power for this. We have realtors come to us all the time, people that have they already invest in a couple of properties, and they often find, wow, I have a lot more capital left in my IRA from a couple different jobs. A lot of people even remark real estate as almost their main job. Their W-2 job is kind of their side thing. And they work in it, but really what is that funding? That's kind of funding their little mini real estate empire. And what this does, you can't buy the same properties that you own personally. You have to buy fresh or new, different properties. But you can go out with the self-directed IRA structure, use the LLC structure, and go invest in properties across the United States, or LLCs that own real estate across the United States, using that bank account and kind of with the checkbook control sides we talked about, managing that with the money coming out of ACH, wires, checks, paying all those people you need to pay to operate and manage a real estate property. So I'm quickly going to go over the solo 401k structure here. And the reason why we're talking about it in real estate, it can work for a lot of different assets, but there's a couple of reasons why it's very powerful for real estate. Look at all of these different types of properties that you can go after. You can do this in a solo 401k or an IRA, but the solo 401k has a few great tax advantages we'll get into a little bit later. So here, I've got vacation properties, local commercial properties, apartment buildings, multifamily, office buildings, which hurting a little bit this last year, but has sometimes been a very strong and consistent investment. Single family home properties that Dustin educates people every day. Real estate funds, getting exposure from a manager to different real estate funds as a passive investor. Hard money lending, or doing those promissory notes. Maybe, typically to a real estate investor, again, this real estate comes up again and again. It's a very strong investment inside of a retirement account for many reasons. People have valued real estate in the United States. And then an international property. Our customers have properties in Mexico, in India, in Europe, all across the world where they feel that's a strong property to own. All right. So, Dustin, I have a common question here. What if your retirement account is too small to buy a single family home property? How often do you run into that question?
I get it all the time. And the big reason why is because, not a lot of people have. Some homes you can see buying for like 50, 60, 70,000, but some homes are 120, 150, $200,000 houses. And you get that question because they're like, well, I don't have enough to just buy it outright. And they're scratching their heads like, how can I actually use it if I can't buy the house outright?
Yeah. And so here I have a few options. And then what Dustin talks about, maybe you can get loan or financing for a property, which we'll get into in a second.
Oh, yeah.
So I constantly get this question, and so what do I do? I really want to own a single family property. I like massive passive income. I want to have a property or two in my, but I like real estate. So I say, hey, have you considered doing a promissory note or hard money lending? There are developers, especially in this real estate craze right now, there are developers all across the United States that need capital, need short-term capital. They might be right down the street from you. They might be in a Zoom networking group or meeting for coffee in a mastermind right down the street from you. Start networking. If it's in these more Zoom heavy times, start looking at Facebook groups, start looking at who has a weekly or monthly Zoom meeting. I often find that these mastermind and networking groups, they're a mixed bag, but if you find a great one, you can get catapulted. You'll get great connections. You'll get investment opportunities. You're gonna get help on your own deals. You might even get co-investors. Two investors can invest in the same real estate project, or two IRAs can also invest in the same real estate project. It is also a lot easier to invest with a more business style partner than maybe a close family member like your spouse.
And Brendan, I think you also mentioned doing something like a promissory note, which is terrific. I have so many students that are buying properties, and there's more properties in deals for them than they have money. So they're looking for other investors, and a great way to tap into your 401k as opposed to going and getting a loan. But you can actually lend your own money to other investors, like my students. You can actually lend money to my students, get a great return on it, put the money back into that solo 401k or solo the IRA. You can do that and still make money. So there's another great way to just get into real estate investing as somebody with a promissory note.
Yeah, and this is one of the most successful ways I see people move from a smaller retirement account up to the ability to buy their own single family home. They usually end up liking both even. They'll still do a mix of promissory notes, but they'll finally say, hey, I finally got enough returns after doing a few notes to buy my own property inside of my IRA. There are real estate crowdfunding platforms for smaller investments if you're looking to do micro investments. There's real estate funds and REITs. And a nice thing with a self-directed IRA is a lot of the REITs out there in the publicly traded markets, they just move the same as stocks and bonds. It's really frustrating to investors. They get a REIT at TD Ameritrade or Schwab and they're like, hey, I'm investing in real estate. And let's say real estate in a certain area is just killing it. And they see the stock market goes down and their REIT goes down. Why does that happen? I mean, because real estate, the traded REIT funds they're getting traded on the stock market every single day. And they get vulnerable to some of those short-term market fluctuations, which can be really frustrating as an investor. So a self-directed IRA can get you into a private fund or maybe a real estate investor in your area that has a fund that totally ignores this stock market short-term movements. Typically, from my experience, it's usually going to be a $50,000 minimum. However, always talk to the real estate fund, form a relationship with them. I've seen plenty of that will decrease their minimum, sometimes as low as $10,000. And this can be a great way, if you have 50, if you're in a more expensive property state, if you have 50, 60, $70,000, which a lot of retirement investors do when they get up there, use that to invest in a real estate fund. Maybe when that fund exits in a few years, you're going to have more capital to buy a property. And the last bit is use a non-recourse loan. Dustin, you talk about this all day long with your students, don't you?
Oh, absolutely. 100%.
Yeah. And, a non-recourse loan basically means it's a little bit different than a traditional mortgage. It is a loan where only the property that you signed the agreement for is at stake. So your personal credit, your personal car, personal house, typically this is, signed off of, hey, if I mess up as an investor, the bank can take these assets and that's going to make them whole again. With a non-recourse loan, only the retirement property, only the property inside of your IRA that you signed the agreement for is at stake. So, some people say, hey, that's a benefit, but also remember, the bank's taking more risk. So they're usually a bit different percentage points. Sometimes they're a few points higher. And, you have to make sure you've really got your ducks in a row when you're asking for a non-recourse loan. If you go to your standard mortgage guy or gal, they'll probably say, I'd love to finance that property for you. But you have to be careful and say, hey, this is going to be a non-recourse loan. Is that okay? Not all lending providers will do that. I'm sure Dustin's got contacts with them. Our partner bank does these non-recourse loans. And just for perspective, the bank usually likes these to be a little bit more rent ready. They like it to be a little bit less fix me up. They want to make sure it's like a steady property that you can turn around and start renting very quickly, because since they can't rely on your other assets if they have issues, they need to make sure that they feel confident embarking in the beginning of the deal. Dustin, anything more to share about, your students deal with these non-recourse loans every day?
So what it really comes down to is with that not having a recourse loan or having a non-recourse loan, it really just doesn't put the onus on you and your personal credit and everything that you own, which is great. So usually it just comes with a commercial loan. You would have it in the commercial loan in your LLC, and you would have it as non-recourse on yourself. So I personally encourage anybody and everybody to get there. It's not, don't necessarily start there as a beginning investor. Jump right into a non-recourse loan. You're not necessarily able to do that. You possibly can. It's just a lot more hurdles to jump through. But usually with commercial loans, you absolutely want to have a non-recourse loan because they go after that specific asset as opposed to everything else. But yeah, we try as best we can to mitigate taxes. That's why I brought Brandon on here, because with Rocket Dollar, we mitigate so many taxes, just like in regular investing, 1031 exchange. We have tax benefits by running a business. We have so many great reasons or ways to get and mitigate taxes. This Rocket Dollar is just another fantastic way to make sure that you're making money and spending less in taxes.
Yeah. And that's Dustin's mentioning the taxes here. I have a little note here about the solo 401k, kind of the secret weapon, is that a non-recourse loan can possibly bring some taxes in a self-directed IRA. So you have to be careful to kind of do your research, maybe visit with a CPA. Rocket Dollar has a CPA. We can refer anyone that knows this stuff backwards and forwards, because there's a certain tax called UBIT and UDFI. And I say it's something to be aware of, not afraid of. It's a tax made because the government wanted to make sure that you couldn't hide too much business activity inside of a charity or a retirement account. So these taxes are kind of old school and they're a little bit high. You have to make sure you're able to write them off if you do it inside of self-directed IRA. So a non-recourse loan should not be taken lightly, but it is a great tool, a great weapon to expand your IRA, get it out to a higher level asset, maybe a higher level property home, which can really work out for you in the long term.
And it absolutely must be said that Brandon and I we're not accountants, we're not lawyers, so definitely check with them. We're just relaying information that we've been told by our accountants and our lawyers. So when you're doing your own due diligence, they're going to help you. Your own accountants and lawyers will give you the best direction. We're just helping you out getting there so you know the right questions to ask.
Yeah, and I have a lot of people say, hey, I'm in California. There's no chance I can ever get a property without a huge loan. Have you considered a property in Ohio or Michigan? I talk to investors in Florida, Ohio, and Michigan that it's really funny to hear the very difference in how achievable it is to buy a certain rental property in different states. Just consider something. Maybe if it's really tough to buy a first property in cash, which is usually your first adventure in a self-directed IRA, it's a little easier to buy it in cash than to get a non-recourse loan. So maybe think outside the box. I know Dustin does education. What if the property's in another state? There's ways to get over that hurdle and that feeling to really get a strong property, even if it's just a little bit outside of your local wheelhouse.
Well, that's absolutely something we love to do here at Master Passive Income is find out-of-state properties because not everybody lives in a good investing area. When I got started, I lived in California in 2006. I wanted to start investing. Well, the prices were just going up and up and up. Just like you said, Brendan, I actually started in Ohio. My first property was in Ohio, then bought more properties, then branched out to Texas and Arizona. And I have students literally investing all over the country. I found that the Midwest down to the Southeast still has some really, really inexpensive homes that you can make at least $250 a month in passive income. And that $250 a month in passive income will go right back into your solo 401k or IRA and continue to grow that so you can even buy more and more properties.
Yeah, and just a great little story. We had someone that they worked with their grandma to buy a real estate property in her one of her IRAs. She uses that monthly income to live off of. Every single month, the rent check comes in from that property. And, her being older, her expenses are lower. That basically pays for all of her basic expenses. And this is a really great way to get some really steady yield coming through. And, the reason I have the solo 401k mentioned here, Dustin kind of mentioned about taxes and the loans, how much space do you have in your inside of your IRA, is that a solo 401k is UDFI tax exempt. So unrealized debt finance income. Congress has just left this in there from one of the rules many years ago. So what does that mean for you? If you're self-employed and you're a real estate investor, if you get a solo 401k, one of the biggest types of UBIT, not all UBIT, but one of the most common types of UBIT that real estate investors run through all the time when they take out loans in their retirement accounts, like non-recourse loans, the solo 401k is totally exempt. So that is a great advantage to say, hey, I need to extend my capital. I need to go after a big property. I'm going to need a loan. I want to invest in a lot of real estate that maybe has debt or has loans out inside my retirement account. You should heavily consider to go through the solo 401k. If you have any self-employment as your spouse, think outside the box. You might already have a small business. You're just not calling it effectively running income through it as a small business. So this is something to talk to your CPA about, saying, hey, I have a side gig. I get paid a little bit. Can I turn that into a sole proprietorship or a little LLC or S Corp? Because then you get access to a solo 401k and you'll also get access to that UDFI tax exemption. And again, like Dustin is saying, these investments, what's hit with UBIT and UDFI and what's not, it does vary. Usually if you're passive investing, you're a little bit more shielded from that, but active investors do have to worry about this. So talk to your CPA, check in your investments, make sure before you dive completely into an investment, you're checking in on what that potential financing or tax liability from UBIT could be. And with that solo 401k, you're getting that same ability to invest with a bank wire, checkbook, or debit card. Dustin, thanks so much for bringing me on here today. It's been really great to talk about real estate, self-directed IRAs, and all these different types of other assets.
Yeah, Brandon, I definitely learned a lot, and I know everybody else is. And so for everybody, definitely click on the link in the description, masterpassiveincome.com/rockadollar, but make sure you use that promo code, Master Passive Income. It's all one word, so that you can get that discount. But yeah, Brandon, it's been great. Thank you so much for giving us so much great information. Hopefully, a lot of people will be able to save money on their taxes, mitigate all those taxes, because Uncle Sam's going to take their portion, and we tried our best to not let that happen within the laws, and Rocket Dollar does a great job. So thank you very much, Brendan.
Thank you, Dustin.
And that is it for today's show. Remember, you can actually get $50 off if you use the promo code Master Passive Income, literally all one word. If you go to masterpassiveincome.com/rocket dollar and use that promo code Master Passive Income, all one word, you're going to get $50 off. Also, it'll be in the description. Just go there as well, as everything usually is in the description. All right, guys, you guys are awesome. I hope you guys are doing well in your investing. See you guys next week. See ya.